Stream will you been? Yeah, it's taking. Hey guys, how are you? We schedule a stream and there's no start button. We can't find anywhere to start it. Sitting there. Anyway, new one. We just kick it straight off. How are you all? How are you all? Great to make your acquaintance again. Good to see you all. We are streaming at you from a very in-betweeners crypto market at the moment. And so here's the thing that we wanted to tell you, and I'm going to keep this one a lot shorter than is normal. So before I forget, by the way, this Wednesday, if you think trading suits you, you're welcome to jump on board for our free webinar where there will be an offer. That will be at 1900 UTC time. And that's this Wednesday. But so cryptos. You want to hear about where we are. Hello, Shambles. Hello, how are you guys? Good to see you all. Thank you for showing up. And I hope to be enlightening. Let me type a quick hello to you all. And great to see you. And to those of you, many of you that I've not addressed per se in a bit, Happy New Year for 2019. May it be an amazing year for your wealth building, your reset sniper preparation. Yes, I think the titanic plates are already shifting under our feet. And also for your crypto trading and investing, we are particularly focused on the entrepreneur, the professional, and helping them become independently financially free. The crypto realm is one of the places where that takes place. So here's what's happened. So December the 5th, I did a YouTube. So it's the one before the last live stream. And I said, dull days. Now we'd recently just run from 6,500. That was a break that took place on the 14th of November and hit our target on the 26th of November. And that was a massive fall from, you could have got in at 6.5 actually when we did a live stream from one of our theory weekends with our community members. And then you could have got in at short at 6.5. And at the end of that all, our first and major primary target of $3,744 on the Bitfinex exchange, minor variations for the other crypto exchanges had been met. We then had a little bit of flurry up and down, smaller setup, pushed it a little bit deeper as you do, up or sideways. They're not fruit flies. So there was still a little bit of lag through momentum, late bears pushing things down. And then you kind of made an all-time low since the highs of December. It's not an all-time low since the boom, and then around the 3,275, I think it was, dollars, not correct to the exact dollar, and varying across exchanges as usual. So that was your big juicy move. That was the game. That was the thing we would put our neck out, and every time it felt like half the year we were saying, it's got to go down. It's got to go down. It's going to go down. It's going to go down. And it kept contracting, tightening, squeezing, and then eventually it fell. And that was a big move. Now, here's the thing I want to tell you a little bit about that move. Thanks for the updates, Francis. Tala, pleasure. Glad to be with you again. Phil Kogan, good to see you, friend. Zoran, hey, dude, great to hear from you. Happy New Year. So here's the thing about that whole event that I want to tell you a little secret about. Now, we're going to discuss it with my premium guys on Friday. It's kind of leaked out, so we're giving it to you. I will recap it with them again, but you're just going to get the verbal explanation. We'll be doing our chart breakdown. But there's a possibility. Remember, with everything, we're in the game of probabilities and possibilities in crypto world. Guarantees. Please make your own decisions. I'm not regulated. You make your own decisions. You accept your own outcomes. What happened is, because we're the market sniper as well as the crypto sniper and the reset sniper, we look at other markets. We look at currencies. We look at the dollar, for example, versus other currencies, such as the euro, the GBP, the JPY. You know them all, even the emergings, the peso, the rand, the tri, etc. So the value of being all round what we call 360-degree aware, in other words, if you're a sniper, you've got eyes in the back of your head, you look to the left and the right, you've got to be really careful, is that we had an understanding of what was going on with the dollar relative to other currencies. Now, if you're the reset sniper and you watch the Fed and the great control structure, you also understand that, oh, they're talking about normalizing interest rates and all of this. That's what the big narrative of the dollar. If you follow the Reset Sniper channel, you'll hear a lot more about those kind of discussions that I have. Suddenly that stopped in its tracks, by the way, as we'd suggested that it wouldn't be able to get too far. That's not us saying we're right. Many people have said it, and it's mathematically impossible with the amount of debt to ever return to normal rates. So it's kind of like saying, hey, when you come to the edge of the cliff, you're going to fall off. So there's no bravado or gurudom being claimed on that, but we did say it, and we made it very, very clear that that was the case. So what's this all got to do with crypto and Bitcoin? I mean, some of you might be here. It's the Crypto Sniper channel. Why are we talking about all this other stuff? You see, when you're trading BTCUSD and in a bear market, here's what we do. In a bull market, we look to build BTC value, and that's what we did. Once we identified it was a bear market, we looked to build fiat because the benchmark is skidding and BTC was skidding. So with that understanding that we're in bear, you're now trading against fiat. What is the predominant fiat? Where's most of the liquidity if you're trading against a fiat? It's the dollar. It's BTC USD. Yes, the others are coming along. Certain exchanges, you might get reasonable liquidity on the euro, etc., but you don't want to be trading any coin out of the top 5 or 6 with any size against the euro or the pound, really, in truth, in terms of fulfillment. And fulfillment matters. What you pay matters in terms of your overall return. So here's the thing. With the Fed's fake narrative of pumping interest rates, going on a small little interest rate cycle and then suddenly stopping like this, like that little road runner that runs, who remembers the commentary, their little wheels and they're being chased by the coyote and then they just stop on a dime. That was kind of the Fed. And so the Fed said, no, we're a long way from neutral interest rates. Well, we're almost there. Yeah, that's about it. That'll do now that the stock markets just took a projectile vomit for 20%. We realize how sensitive all this is. It's funny we needed to test these things. Does this burn? Yes, it still burns. Yeah. Anyway, so that's the little thought experiment they took us through. That's right. Beep, beep says, what a shambles. I remember that very well. Anyway, so they've done that. So what happened during the big chart of BTC is you got the 20,000 and then you had that first big down move and you had a major slam down the first time you hit the 6,000. 6,073, we had it inverted and we called for that bottom. It was one, we got accurate, we get many inaccurate, and we got out on that wick on a short. And then it had a vicious rebound and went well up to about 11,000 again, and then it came back down again. Now, in our structure setup that we had for our downside, we couldn't take that impulse into account because later on it went a little lower Bitcoin. So we're technical traders. That's the market sniper, the method that we're bringing to the crypto market, that's BTC. So we're pulling all the pieces from our 3 circles that overlap in the middle, and that's the sweet spot where you've got to shoot accurately. And that's where we're standing or trying to stand, sometimes successfully, sometimes we fail. And what happened is within all of that, the structure was different for the dollar. Why? Because during the period from the first bounce down, where it went just around 6,000, we got out at 6,073, but I think it went $20, $30 more before the big rally up to 11,000. So you need to visualize this chart. I've got to find out how to do a chart share at the same time so you don't have to watch my gorgeous complexion and actually see a little bit of the visual things I'm talking about. But have a look at that BTC USD chart while you're looking at this, and you will understand. And then it sagged marginally lower against the dollar. Now, here's the important point. That was unique. That was unique to the dollar. In fact, if you do BTC, GBP, and yes, I know it's a much less liquid market because that fiat is not as prevalent with crypto, but it's getting bigger. BTC Euro, yes, again, still not as big as the dollar, but a substantial major alternative currency to the dollar. They all were, that was the lowest spike. Everything else was in our inverted HVF. This actually means when we traded the BTCUSD, we traded actually only the last three from the right. In other words, the more recent. We never could take into account the big amplitude generated by the geometry from that first dip down, which is the panic absolute capitulation sell and that snapback rally. That was the harshest rally as well. It was a real V in terms of volatility. Wham, bam, bounce, proper bounce, up to the 11,800s, I think it was. And we couldn't count that as part of our geometry for projecting our target to the downside, because that's what we like to do. You see, as much pain and then snapback rally you get, the same number of people, same amount of energy, kinetic energy being in there. That's how much they get. Euphoric and morbid to the upside is how much they will fall to the downside. There's a natural geometry to charting. Anyway, too much to cover in a live stream like this, and I intend to keep this one a lot shorter. What we actually have is we have a bigger structure pattern for Bitcoin's down move. That whole period of technical analysis wasn't a bottom as we asserted. And actually we have a bigger structure. We can include the first impulse, which was the biggest one on the GBP, the euro. Now I went and did something else with a bit of help from my friends. I've got an amazing community and they helped me get better at the things I need to get better. I managed to find out how to do that same chart against gold, because I thought, well, maybe it was just lucky on the euro, the yen, and all of this. And then I went and did the crypto BTC, Bitcoin against gold ounces. And guess what? I got the exact same pattern that I got on pound, euro, and all the other major FX pairs. In short, we're actually in a bigger bear structure setup potentially. Remember, this is a probability game. In 6 months' time, you can all come back and go, oh, you were wrong. We're okay with that. We're trained. We're not clairvoyant. We're not the crystal ball gazers. We're probability-based traders with a method. And so what that actually means is the dollar was the outlier. So when you're trading Bitcoin, most of the time against the fiat, and it's the dollar, you're forgetting that the dollar has its own story too. The dollar has its own story too. And the reason why it dipped lower the second time is because they were continuing to peddle this fake narrative of onwards and upwards, and the dollar against the currencies, which we were trading as well, whilst also keeping an eye on crypto, we were seeing the dollar was dominant strong. And it was exceedingly dominant strong against the euro, against all of those things. A lot of that since changed, as you saw. And in fact, we've had a spike down in the yen. Yen is your great fear currency. That is where the carry trades all have to get unwound. You see, this is becoming useful for crypto. You didn't think so, but it helps to be a trader before the crypto market because you get additional information, and it's a wisdom that can take a while to build up. And yen is the fear currency. Actually, in 2008, go look at it, the yen got the bid, more so than the dollar. The dollar got some fear hideouts, but the yen got even more. Why? Because people borrow in yen to speculate, to buy American stocks, etc., and elsewhere, because they've historically, before all these ridiculous low interest rates, but even still today, historically have even had lower interest rates than everyone else. They were into the whole deflation thing and the bad end of the demographic curve. Lots of old people, not so many young people, none of them wanting to have babies. Yeah, so that is Japan, and Japan is a lot of our big Western nations 30 years from now. In other words, over-dominant in the older people, not enough youth paying in. Anyway, so we're digressing a little bit, but the key thing is the overall structure is that we're in a bigger pattern. In short, this is why I've continued to bias bear. We took our full target and we did actually close in full. And then on hindsight looking, we always do what we call the post-mortem and review. What did we do right? What do we need to change? Did we get anything wrong, etc.? And suddenly these other facts started to distill their way through. And we realized that in actual fact, we traded what was a full target on the dollar, but actually in all other major fiat comparables, including real money gold, we're still in the major pattern. And in fact, we've just made what is the second interim instead of the full target on our method. And what typically happens at interims is you get a bit of pushback and a bit of rally. And that's what's going down potentially. Could we be right? Maybe, maybe not. Could we be wrong? Who knows? So I saw a couple of people's projections of where things might go and how it's all working. And I said, here, let's have a look at this ourselves. And we've come up with the targets. And I'm going to tell you tonight exactly where I stand and where those targets were for those. And you can decide whether they will happen. There's one small aspect about this. That first impulse, that major spank down, that pop up and then bounce and then all the way down, it had a kind of funny shaped impulse in it. That could have been, we don't tend to like that too much. It makes it a little bit, could be, could not, but it's not a disqualifying factor. It's just it's a beautiful woman with a mole, and that's what you got to decide whether whether that's a game spoiler or not for you. So here we go with that. So against the pound, maybe I should save that one for last. Against the euro, we have a target of 1,050, between 1,050 and 1,070 euros downside, and that we are just stalling now and getting the pushback. And this is why I have our bear and square bias at what is our second interim against the euro. Listen now, because I'm talking different currencies. Now, if you take current euro USD exchange rates, for most people, including ourselves, even though we're not in the States right now, most of us know the dollar price. So BTC, I think, what's it, 3,760 at the moment, had a little spike out of a low volatility. It's exactly, virtually exactly where the target was. We were at 3,744 and it was trading 3,750. In other words, when we did that video on the 5th and said it's going to be a boring old time, you've gone basically $300 or $400 down to the 3.2s, you've gone up to the low 4.2s, and then you've been messing around. And right now, the better part from November the 26th, when you close that trade at target till now, essentially, whilst you've gone on a small journey, a little bit of an S, a little bit of a down, you are exactly where you were, as you were. These are why I said it's going to be dull days and a dull time. Do not be too aggressive trading. You're going to be trading the short time frame, and you're going to be trading potentially against the macro trend, because you're going to want to trade a little bit long against the rally. And we say generally don't do that. The move could reassert very suddenly, and we were bear or square. If it rallies to a certain level that we consider interesting, we'll rebuild shorts for a bigger level that can then be held right the way down to euro 1,070, 1,050 range, which will be, give or take, $1,225, $1,250. So that is a possible target. Remember, our targets are made and then usually run a little bit through. Usually made and then run a little bit through, if it works out, which is a probability or a possibility even, not necessarily a guarantee. So where was it for the pound? Well, against the pound, actually, you dropped sub 1,000 pounds, the target we got. So actually, we've got the same pattern, the same structure across all others, and it actually gives me a pound rate and a euro rate. This is really, really interesting, because you could even triangulate and work out what, if both targets made, the euro pound might be. Remember, there's a Brexit going on as well. I'm not going to go down that road and handle that can of fish, but it's suffice to say, it's called triangulation. When you get a setup across many different currency pairs with one predominant asset, aka Bitcoin, you can actually do triangulation. Fascinating. Anyway, not content, this deeper content for another time. Premium areas probably. So what do? The gold, I did the one for the gold. What did you get for gold? Now, I'm actually slightly bearish gold. I know what you're thinking. I'm a big gold fan. I think it's real money. But technically, I'm not impressed. It's had a little bit of a flurry and all of that. I think we're resetting, and there's going to be a deflationary moment. There's going to be a deflationary moment. And I think that first collapse of that stock market has not actually gone away, that we've just had the rally back. I think there's going to be further volatility to come. But anyway, let's say that's wrong. Who knows? But the gold ounce answer for Bitcoin was 1.23 ounces of gold. The gold ounce answer is 1.23. Now, if gold were to be $1,000, because we've deflated a bit and there's a bit of fear out there, you would get around 1,250. I know you'll say it's not $1,000. I'm expecting a bit of easing from that. We were at near all-time highs for the gold-silver ratio, and we had a little stab down out of the gold-silver ratio, which is bullish for gold and silver, particularly silver, which is the higher beta version of gold. So we had a little bit of a move up. So all of this could transpire. It's a probability of where I think it's taking, and it is my bias. It's my bias by 55 over 50. I'm not calling it a 90%. In fact, rarely do I call anything a 90%. I'm not even calling it a 70% is what I'm saying, but it is my predominant bias. And even there are other options apart from bull. So the other options all fit into the 45. It's not, okay, we go up and all of that. In actual fact, I don't feel my target range for the lows is going to be 1 to 2K for Bitcoin, that it'll bottom out potentially. That's probably my highest probability. I've allowed a certain probability for lower and a complete failure, and it turns into what was a Tamagotchi fad, and we're now talking about Hashgraph or something else. That I've only got at very low percentages. So I'm not complete bear saying the death. And on the all-time highs question, and I'll tweet out this table because another commentator did a very interesting table, and I like the fact that he did it, and I respect him for doing it, and I've just put my percentages. And he asked, where will we bottom? And I've given across all the way along from 2 to 3K, now we're bottoming already. This is the last low. We've already got it in. We only go up from here. And he gave his percentages. And he also asked the question, when do we make a new high again for Bitcoin? And he's given his years that it will happen. And he thinks you're not 2019, although he thinks a fair chance 2019, but definitely the one after, because his following years are quite low. And I think a bit longer. So you'll just compare our opinions. You'll know the other guy, and you can share, you can say what you like about it. And I'll tweet it out. If you're following at the Crypto Sniper, I'll tweet that out and I'll give you my take alongside his take. And this is just, we're not picking a fight. It's a man with opinion and I'm with opinion. So we're just seeing, isn't it nice to benchmark a view against someone else? And I think I'm broadly more bearish, and I think it takes longer for the recovery because I fear general economic things are going to catch up as well. So that's my take. That's a big warning. It could go to 1250. In other words, that 1 to 2K range. And with a bit of rolling over and a bit of bottoming out momentum, the low can be somewhere beneath that. But we feel that there's a realistic reason to believe 1250 could be run. Note, that wasn't generated from the chart setup because it's invalid on the dollar. It's generated by the euro and GBP setup and doing a guesstimation of where that will be against the dollar. And that's our best guess. It's also, we use the gold ounces. And on all three of those things, those are the two major currencies, by the way. You could have also done the yen if it meant anything to you. You could have looked at the Aussie. You could have looked at the CAD if you're from there. And that's more important to you. What's the Bitcoin price in Canadian? Be my guest. Give it a look at the charts. Better still, learn the method so that you can do it yourself, and you can come over on Wednesday and find out more. But that's my take, guys. Let's see what you've got for me. Are you bullish on the dinar? I don't know. I have no view on that. You can buy gold with Bitcoin, with JM Bullion. You can indeed. So have a look at your gold ounces to Bitcoin ratio now. Refined hayseed Appalachian. You can paper gold over at Gold Money with BTC, he says. Dimitri, you are the king of crypto TA. I don't want to be the king of anything. I want to be the king of helping traders. I hate control structures. I thank you for the compliment, though. I know what it's meant. But I want to be the king of guys that can help develop traders build their own wealth. The John the Baptist, if I can, of setting you all free from the control structure. I resent control structures. I resent that we can't have our own money system. I want the people to break free from their treadmills that they've been put on. And if I can contribute towards that, that's our goal and an objective. But thank you for the compliment. 750 from Descending Triangle, says Gosha Roz Iqbal. I'm not too sure what you on which setup you're talking about, but I think what you're referring to as the descending triangle will be our larger macro inverted structure on the daily on Bitcoin. I think your 750 is a bit big and it's a bit rich, maybe, but you may be accurate as well. So respect to you for putting your head on the block there. What time on Wednesday? 1900 UTC time. 1900 UTC, which is GMT at the moment with winter times. Come and hear our webinar if it suits you. Not for everybody. Trading isn't for everybody. I'll have 3 or 4 or 5% of people that come on and just like get angry and emotional and hate it. Check yourself. Check how you cope with risk. Check how you cope with certain things. And I have other people that have taken in single trade 6-digit sums utilizing the method. A number of them. In fact, one of them's right here amongst us. In fact, a few are that are members of our community that did exceedingly well on the last sell. We're fortunate to have done well as well. Bernard, my main man, register for the webinar on themarketsniper.com. Thank you. Very well said. We can all be wrong sometimes. It's good to be right. You don't even have to be right 80%. It's a fair point, Dr. D. You don't even have to be right 80%. If you value high rewards, really high, expansive rewards with tight risk, you can enter 3 or 4 times and be wrong and then get your big trade that makes $3,000 spill from 6,000, and you could be scalping $25, $50 losses when it wasn't quite the right time. Those are all paid for many times over. So actually you can be right 15% of the time providing you've got the risk reward ratio right. But you're quite right. It's not about being right. It's about making money. It's about staying in the game. So I've got a couple of trolls that go on, oh, he's wrong 90% of the time on my Twitter feed. It doesn't matter. Doesn't matter. They want to count. You get low energy folk that are trying to keep score and bring you down. It doesn't matter. It's are you making money? And if you're a teacher and providing services of that, can you help your students to do the same, and your people? And we can. Some of them, they bring some of their kids. We don't know what we're getting, and we bring our kids. They don't know what we're giving, but with the right guy and the right people, if trading's for you, we can make a difference. Good. Phil Kogan, don't forget to click the like button. Yes, indeed. Thanks, Phil, for that. It helps us. Thank you. That's 32. Amazingly, it shoots up. I appreciate you for saying thanks, for giving me your time to tell us your views. So we are distinctly in the bear camp still for crypto. By the way, if you get a 60% drop, we've got it at 3.7, and if you go to 1.2, you're talking about not just 2,000. Actually, 2,000. 60% is conservative drop for Bitcoin. If it makes the 1,250, call it a 1,300, because we don't have the specific on the dollar chart. Let's say it's a 1,300, 1,350, give or take $100, and it dips maybe a little bit through there, and the others make their 1,070 euros. We don't know what the euro crosses and the pound crosses. Remember, if they do a big stitch-up deal on Brexit and they say, yay, Britain's still in, special custom deal, only it's a big snaky deal, they'll make the pound and the euro rally. And then the American market will get a bit of trade benefit, because those two current country zones have had quite a bit of benefit out of the Brexit weakness, of the uncertainty implied to that. So we don't know quite what the dollar will be to that, but the currencies don't generally move as broadly and as wildly, of course, as the cryptos. So, we could be anywhere between 1,200 and 1,350 with the bottom of Bitcoin. If you take that from 3.7, in actual fact, it's 33% left. So you could lose 66%. You could be left with 1/3. That would be a very, very profitable trade if it works. Once again, not telling anybody to take anything. I know what I'll do on my account, and I know how I understand my money management, and we also know how we've worked towards training our premium guys and continue to. There's lots to be doing. We're going to be doing recovery ladder soon with them. We're going to be doing advanced money management on technical patterns, how you drop it into your sheet. So that's all coming, and we're pretty excited about that. But I can certainly say you might be able to do pretty well out of that. But if I can save you from losing anything, and we turn out accurate, then it's been helpful. If we're wrong, you've got to own it. It makes sense to me, but it's got to make sense to you. And if it doesn't make sense to you, buy the bottom then, or at least play safe. Better still, play safe, in my view. But there will be many that will still revert. When do I buy? In other words, they think the only time the money is made in buying. In actual fact, right platforms, right understanding of margin, right money management, the falls. I've got one guy who just wants Bitcoin to fall now. He was a major bull and he just loves it. He loves it. He says, oh, Bitcoin's bleeding out again. I love him. He knows exactly who he is. He's right here now. Heads up to you. And he's like, now he doesn't want the bear to end because he's got good at shorting. It makes you the complete man. As someone who can do something at night as well as day, instead of like a half-caste man. And that's the environment. Generally bearish on ETH, yes. So the point I was building up to, thank you for your comment, Sito Rusko. So the point I was building up to is actually it's a bigger loss in percentage terms than I've alluded to. I try not to be throw out the most spooky number of it all. I think you should overperform to the 60% on Bitcoin. And again, the big major alts with good liquidity will have a higher beta. And my favorite, which I would probably get my little carving knife out of and have a wee stab at, is Ethereum. That doesn't mean I've always nailed it. I took some from EOS a while back, but it's on the periphery of liquidity. I prefer the really liquid ones. You want to look at the Ripple, the Ethereum, and some of the others. Those are where you might. So absolutely the alts. So the real. If Bitcoin's to do what it may well do that we're insinuating it could do, then you want to maybe have a little on Bitcoin, but also maybe even a bigger chunk on your favorite alt major and trade the Bitcoin target on the alt major. So what do we say? Let's see what it is. Kieran Malvada, search for DiMartini. Yes, do a search for DiMartini. I'd recommend to any of you to contemplate him. The quality of your life is determined by the quality of the questions you ask. How do you deal with the challenges that you have? Ask, how does this serve me? If you're in pain, you're frustrated, you've got stress, you've got people winding you up, how does this serve me? Is there a message of real value in there for me? There usually is, and you come out stronger and better for it. And he says, when you crush through his breakthrough method, all energies that you've stored, anguish towards your parents for putting you down, an older brother, sister, and all these things, all there is left when you really, really compress and saw how they served you is gratitude and love. I like his message. And it's not just all cuddly bear, huggy stuff. I know to some of you will go, gratitude and love, you're sweet. No. Truth. And love, and not in the sense, just broad understanding and affection for your other man, and actually seeing, thank you, actually gave me a gift through that. So definitely have a look at DiMartini. Who else was talking out there? Recommendations, how to learn more about trade psychology. Actually, so I did an interview series with John DiMartini, and I was hoping to do some more work with him, but his people kind of got in the way and wanted whole bunches of money and all of that, and we had to sell things at the end and all of that, so it became a little bit of a sort of an overly markety kind of thing, and I just wanted the value content to rip out. So unfortunately that opportunity passed us by because we wouldn't agree to certain things and guaranteeing for certain costs and ensuring thousands of people came. I don't know how many of you guys would show up if I was going to do another interview series, and I can't be on the chopping block if only 500 came. But the point is, that's nothing to do with him and, these people, this happens and I understand why they do what they do. But the point is, he even spoke on wealth building generally. And the key thing is always be within the 10% range. You can live within your means, and you won't hang yourself if you're a millionaire and you lose 10% down to 900 grand. You aren't smashed. And if you make 10% from your million and you're now worth 1.1, you're not going to lose your head for having had that. So he said, and he's actually talking about stop loss, but he's talking about overall aggregated wealth. So never do anything that's likely to give you much larger on your total aggregated wealth change more than 10%. And that's quite smart. I mean, I always feel I'm a bit more of a risk guy. I can take a bit more, and you think that, but then you get a double whammy and you pushed a little bit too hard and you think you could push it to 15 and you end up taking a 25. And then, if you do that on your entire wealth, that's quite a hole. If you drop down to 750 from $1 million, or you go, it's a little bit, you're swinging for the bleachers there. You do that one more time and you're half what you are. And that's when we talk about the recovery ladder, the percentage to get back from 50% to where you once were. And that's the mental trader psychology. You just want to return to where you once were. What do I have to do? You don't have to take that 50% back up to the 100% it was, that 500,000 back up to $1 million. So now you take a much bigger risk because you have to double your money. And you repeat what you did last time because you're convinced you're right, and you're going to keep on doing it until the market bloody well listens, and boom, now then you go into the spiral, and that's a psychological, and it's your fight and flight that's working against you. And that mental psychology we cover. It's part of what we do in our content as well. In fact, we will be we're in a process of redoing our entire rollout content. It's going to be done, good wall lighting, great audio. All the mics have been done. When I first did this and taught it a long time ago, it was a snowball mic on a Mac, it was pretty everyday guy tech. So now we've really tooled up and we've got slides. We're going to get it's all done. In fact, our free series will be the first sampler you'll get. It's run a little bit late. We know that. If you haven't registered for it, register for it. I don't know if Bernard's going to have the quick link for that. That might take a bit. We'll post it in after the comments. But we've done a nice professional record, and we're going to be rolling out that standard, and we're going to redo our entire catalog of content and bring it up to date. So it's going to be 18 and 19, 2019 charts, new slide templates and everything. And amazingly, I've learned so much more. I've got new stuff to say. That's content, real quality content. That's experience. So that's all coming along. Okay, I'm a fan since the time emphatically called on Novograt's bullish bottom. Yeah, we did call him out. He was a bit strong, and he took people out into deep water there a little bit. But at the end of the day, all that happened is he made a forecast and he was wrong. I think he needed it for his business. So I kind of don't like if people are too bullish something that they need to be bullish, because then they're talking through their pockets. I'm just here to read what the chart's giving me, and I'll go in the direction it's going. I'm not going to just be Bitcoin is always up. Bitcoin is always up. In fact, I've been saying now for a long time, Bitcoin is down. After at one point, we were riding it on the upside and we were very bullish. So, and we weren't brilliant about when we turned. We were a bit late to turn and pick up the trend like everyone else. We were also inhaling the opium and drinking the Kool-Aid. But just through experience, we slapped out of it a little quicker. So while everyone was absolutely smashed, puking drunk, we were just a slightly tipsy, and we were able to snap out of it. But it had already well under the 20K top before I was saying, damn, man, this is different. But you have to recognize that, and that's the blow off and the volatility. But your brain doesn't want you to do it until you keep training yourself, and you get better and better each time. But you will still sometimes you'll still think, no, I've projected this to the moon, and that's where I get my Lambo, or whatever the case may be, my lunar Lambo for cruising the dunes, and the little Sphinx face that's on the moon, and all of those other blue cheese things going on. Okay, guys, I'm largely done with the content, and I want to make these quicker. Thank you for hitting us for the likes. That's amazing. 47 likes out of 134 of you. I appreciate you for doing that. If you value that, we'll see you on Wednesday. If it works for you, we would be going down the road of building your wealth through trading in both the crypto markets and other markets, applying a method. We're perfectly imperfect in all that we do, but we're always looking to get better. And if it's for you, think hard, because it isn't for everyone, and it gets emotional, and losses are taken, including by me. So, whatever you do, it's part of the game. It's a probability-based game in an uncertain world. But we think we've got some of the scripts. We think we've seen some of the scripts through the reset sniper, through what we assess can't go much higher, and has to have a day of reckoning, as well as on the crypto side. And of course, a method takes away the emotional responses and gives you a template to hang your Batman suit on. Okay, with that, I love you and leave you. Thank you very much. We appreciate sharing and thumbs up, and we look forward to catching up with you again. This is why I say to you, bear or square in cryptos. fair or square in cryptos. And I hope to be accurate so that I save some of you some money. I could be inaccurate. And I've given you an idea of how far I think that could go, my probability. So with that, we'll see if we turn out accurate, and we accept either outcome as it comes. Thanks a lot, guys, and bye for now. Enjoy your evening. Enjoy your week ahead. Bye-bye.